You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's blog gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/blogs today to sign up for regular updates via email. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever fun, ever compelling, ever insightful Options Insider Radio Network. If you're just listening to Vol Views right now, first off, welcome. We love you. Secondly, there's a whole other universe of shows out there for you, 14 others to be precise. Easiest place to discover all those is our full network feed. Just search for Options Insider Radio Network wherever you get this show. So it could be iTunes, Google Play, wherever you get it. Or, of course, you just go to our website, theoptionsinsider.com. It's all there, too. And then you got all those shows to mainline. So if you're saying, I like Vol Views, but I need more, well, we got you covered over there. 15 shows. You'll have your options fill. Don't worry. And, of course, you can always, for the super hardcore of you guys, we put out a little bonus. We also stream the show live every Friday, noon Central, 1 p.m. Eastern, via Mixlr, MIXLR. So if you're around and you're interested in the vol space, by all means, check it out. You can grab that link pretty much wherever you follow us or find our content. That link is there. Grab it once, bookmark it, save it, and you're good to go. Also have our mobile app, all that fun stuff. Unfortunately, the live stream doesn't work with the mobile app. Maybe we'll see if we can fix that down the road. But for now, live stream or the mobile app is for listening after the fact, and also has all the built-in ways to reach out to us. So social media, email, all that fun stuff. Hit us up, questions, comments, insights, pearls of wisdom. We love them all. We do love to hear from you guys. And joining me on the old program today, let's go in order of how many times they've been on the show. So let's start off with the greasiest of meatballs and the Carmenist of Carmen lines, Mr. Mark Sebastian. Mark, welcome back to Vol Views, sir.
How relevant that the Carmen line is coming up just as we have our wonderful eclipse on this Monday, you know? How have you gotten your eclipse glasses yet, Mark Longo?
I have not gotten my eclipse glasses yet. I'm behind the times on that.
You are really behind the times. Those are a tough commodity, man. You got to go out and get some. I had to send my intern to the DeSable Museum on 56 and Cottage Grove in order to get a pair from Chicago.
There you go. Some good intern usage there.
Excellent. Folks, if you don't you're not really an intern if you don't get sent on some menial, meaningless task at the behest of the person you work for. But good to be here. And like I said, who's excited for an eclipse and has two thumbs? This guy.
Hopefully you're also excited about some vol, because we got some vol popping off this week, and we're going to get to that in a second. First, let's welcome on. We got an expanded panel for your listening pleasure this week, listeners. Starting off with the someday down the road Dr. VIX. Is not able to join us this week. He is quite literally, I believe, on assignment. So we have one of his fellows over there at the Options Institute filling in. He is Kevin Davitt, a senior instructor over there at the Options Institute. Kevin, welcome to Volatility Views.
Thank you very much for having me. Sorry for bringing the JV team today, but I'll do my best to not miss a layup. We've had a volatile week. Plenty to talk about.
You got a good one. You got handed a good week. So I'm sure Russell is probably quite upset that he's not on the program this week. You know, you were on, some listeners may remember, you were on many years ago, I think, on our network when you were back at a more commodities-focused firm. Now over here at the Options Institute, obviously the focus is equity index options and volatility. But that said, since this is your first time on Vol Views and your first time on the network in quite a long time, why don't you go ahead and give our listeners a little bit of overview of your background and what the heck it is you do over there at the Options Institute.
All right, will do. So I am an instructor at the Options Institute. That's the education arm of CBOE. In previous incarnations, I spent years on this floor as a market maker. So we're talking late 90s to 2006-07. I worked with clients and a firm when I used to be on your show that was commodity centric. And so I've been exposed to both the equity world and the commodity world. And if we're talking about VIX, understanding term structure, which is something that those that trade commodities probably already innately do. But the importance of that can't be overstated. And today, again, I'm JV, but I'm going to do my best to not fumble over a pretty exciting volatility week.
You know you're not on the first string yet when they don't set you up with Skype. We got you on the magic of telephone coming in this week. Hopefully, future installments will get you beaming in via some Skype so we could chat with you, keep you all in line, all sorts of fun stuff. You're missing out on all the fun behind the scenes chit chat here, Kevin. You're on phone, but we'll get you for a future show. We'll get you on that way. And last but not least, you may remember him, listeners, from his multiple recent appearances on our Advisors Option, also our Trading Tech Talk program. He's been on a couple lately. He's been making the rounds on the network. He finally makes his way over here to Volatility Views. He is Matt Amberson, the founder and principal over there at ORATS. Matt, welcome to Vol Views, sir.
Thanks, Mark. I'm excited to be here. I'm jogging around the Option Insider various podcasts. So this is a lot of fun to finally talk to Mark and Kevin. I was on the floor as well, down on the CBOE from 93 to 2002. I had a group down there, worked a lot with the CBOE internally. When you have a group, you're upstairs quite a bit. So I haven't met Kevin, I don't think, but I'm looking forward to it. And of course, I know Mark from way back, so it's great to be here.
That's what happens when your expertise falls into multiple different areas of the option space. You get to come on many different programs, so it's fun. We talk tech, we talk advisors. Now we're going to talk a whole bunch of vol, and there's a lot to talk about this week, so let's get to it. It's time to kick off our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review. Like the man said, this is the portion of the show where we break down the week that was and indeed still is from a volatility trading and trending and analysis and activity perspective. And oh, what a week it was and indeed has been. Seemed like for a while there, it was kind of shaping up to play out a lot like last week, which was kind of a quiet earlier period of the week. And then all of a sudden, latter portion of the week, things get crazy, precipitated by a tweet storm or two out of the Oval Office and some other fun stuff going on. That's what we saw play out last week. We started seeing it play out this week. It wasn't so much fire and fury this week as much as all sorts of other stuff going on that drove a lot of that back and forth. So we did see VIX Cash popping up yet again this week. It hit a high of about 1577 earlier this week, and now today it seems like we're breaking from the script. We're not having really as much of a tumultuous Friday. In fact, most of the major indices, as we're recording this, listeners, are up on the day. S&P up nearly 0.5%. The Nasdaq, which got, I think the technical term is crushed yesterday, up over 0.5%, 0.6% actually. And the Dow, the laggard, only up fractionally on the day. And of course, when there's green on the screen, particularly after all this tumult in the space, it means volatility is going to take a little bit of a breather, and that's what we're seeing today, off over two handles, 2.12 to be precise, hovering right around the 1340, 13.5 level out there. We'll see, of course, as it plays out. Looking a little bit better for my prediction. It was looking really good for my prediction earlier in the week. Then, of course, macro events had to intervene, and everything went out the window after that. I think we were all a little caught off guard by that, at least from our vol crystal ball predictions. We'll get to that in a little bit, but first, let's break down the week that is right now. Let's go in order of our guests here. Let's start off with Kevin. You haven't been on the program before, so what's been catching your eye this week from a volatility perspective?
So I think you kind of hinted at it or hit on it just a minute ago, in that this week has in many ways mirrored last week, where early on we have slow summer markets. I think between Monday afternoon and midday yesterday, cash VIX kind of wandered between 12.25 and 11.25, and September futures. So we had August futures expire Wednesday on the open. So for the most part, September has been front month this week, and that kind of flatlined around 13, and that absolutely changed, a little over 24 hours ago. The difference as far as that mirror goes is potentially today, but we still have a handful of hours. So last Friday, vol came in just a little bit from the Thursday highs. Today we're seeing VIX in fairly notably, again with a few hours to go. And I don't know if you attribute this to Bannon. Is he out now? Is that confirmed? Or a lessened fear of North Korea, or what, just total political chaos? I don't know what. But again, we have a couple hours to go, and I think watching the term structure, which I mentioned in the intro, is going to be telling. So last Thursday, we saw cash VIX. We saw the term structure invert, which happens relatively infrequently. If you take a long-term view, that's somewhere between 10 and 15% where you see cash over month one, over month two. That happened Thursday. Last Thursday, it happened pretty much yesterday. We saw a very flat structure in the front where cash VIX month one and month two were essentially like 15.5. And now today we're back in a carry market. So I'm going to keep my eye on the term structure, which has been moving with greater velocity than it has in recent memory.
Yeah, you're right. We did see that inversion get a little backward there. That tends to happen when the cash gets a little, shall we say, wonky, a little bit aggressive. The futures, everyone who's listened to this program for a while know, they tend to move a little bit more, shall we say, a little bit more certainty, a little bit more, shall we say, reticent to move them up 30% the way we see the cash jump all over the place sometimes. As a result, you get these weird scenarios where the cash is inverted and the futures were hovering. We saw about a 1 point differential with the cash above the front month for a little while there, and about 3/4 of a point for 2 months out or so going out into this last night, into this morning. But we're seeing that obviously come off now as the cash is coming back to, shall we say, where cooler heads can prevail. Speaking of cooler heads, he isn't one, but we'll toss to him now anyway. Mr. Meatball, what was catching your eye this week, sir, from a vol perspective?
Well, how about VIX settle on Wednesday? Let's talk about that. How did we settle 1295 is what I think a lot of people are asking, because that settle was well higher than where the cash index was the night before, the day of. And what I'm hearing was there was a total lack of liquidity. That's what it's being attributed to, but it's still a very dubious settle. I mean, when you settle about $1 above the cash market, something is up. So I think there's going to need to be some exploring on VIX settlement from Wednesday. And VIX explosion. I think we talked about this on Option Block last night. There's definitely, Bannon is out is what we're hearing. And yet markets are only up 5. What is going on? There's something deep and something uncomfortable in the vol space right now. And VIX is being very, very stubborn. It makes me wonder whether there's another shoe to drop here. So that's what I'm seeing and what I'm wondering about.
I think there's someone in the background there who also is voicing his displeasure at the at the settlement. But you're right. I think another week, another month, another VIX settlement is contentious. I think you can pretty much copy and paste that script. This week maybe a little more than others recently, but it seems like every settlement there are people on both sides who are equally upset, if not sometimes more so, in different directions. It's just I think the nature of the beast out there in VIX land. You type VIX settlement right now into your Google search, and you're going to find a lot of disgruntled people on both sides. It's kind of par for the course out there in VIX land. Matt, I'll get your thoughts as well. I'm curious. You obviously are out there running a lot of analysis, a lot of back tests on all things in the options market, including volatility. What was catching your eye this week, sir, from a volatility perspective?
Yeah, we approach it slightly differently. So ever since Trump was elected, we looked at this component ratio, which is basically the weighted average of the components of an ETF, just all the sectors, the spider sectors, including SPY. And we analyze that ratio. So what you want in a healthy market is you want the individual components of an ETF, their volatility to be much higher. So you get the benefits of diversification. So, and when you see a lower what we call a component ratio, when the implied volatilities of the components are close to the ETF, that's getting implied correlation is very high. So you don't get the benefits of diversification. And that's when we see that, we see a weak market, one that's more volatile, and we're usually more bearish. So given that, we track that very closely. And ever since, almost a year ago now, since Trump was elected, when you have a new body coming into Washington, you have some winners and some losers out there in the stocks. And we saw, some stocks going up, some stocks going down, and a lot of benefit from diversification in the ETF. So the component ratio is very high, and we've measured that all the way until just a couple weeks ago. Now, a couple weeks ago, we saw, I'd say about 10 days ago, we saw a big change in that component ratio, probably about the time, a little bit before North Korea started heating up. Because when you have a North Korea type situation, that's when you get implied correlation, near one, when everything's moving together. You don't get the benefits of diversification. You have people looking at outside macro events. And like I said, that tends to be not as good for the market. So we started we have a component report. I send it out free for our clients, matt@orats.com if you want to get it. But we started seeing that component ratio come way down. So it was indicating more of a bearish and more volatility to come. And that's what I see now, for the coming weeks, months, until that ratio kind of collects itself. I see more volatility coming, and I think that's going to be one of the drivers of it. So that's what we're looking at, Mark.
Well, you're certainly not the only one out there who's predicting a little bit more volatility. And we got hit up a lot of people asking us about this article. I think it came off CNBC. I usually try to avoid these type of histrionic type articles because I hate to give these guys ink. Someone comes out there or give them airtime. Someone comes out there and makes a redonkulous prediction on VIX and they get all the headlines. Yet everyone's asking us about it, so we'll spend a few minutes talking about it. This was this volatility guru in quotes who is out there saying VIX is going to effectively quintuple by Halloween. He says it will touch 60 before we have pumpkins on our doorstep. So getting a little bit, use a little metaphor, throwing in a little alliterative there as well. This is Larry McDonald. He's the head of global macro strategy and MD over there at ACG Analytics, one of the legions of analytics firms who play in the vol space. these days. And that, these kind of things, like I said, and I've mentioned this to people who've tweeted about us and this kind of stuff asked us about this article quite a bit, that I'm kind of, I have my reservations on these kind of things. But I know, Matt, let's start with you actually, because you actually crank a lot of the data out there and you look at the numbers and you crunch the numbers on a regular basis. You're back testing these kind of things. Do you have as dim of a view on the potential for a VIX at 60? He's not even saying by like next year or something. He's saying in a couple of months, in like 6 to 8 weeks, we're going to be at a VIX of 60, literally 4x where we are now. How does that rate on your back test feasibility scale?
Well, if you would have asked me that a few weeks ago, what I would have said impossible, but now it's not, I would say not likely, but it's definitely possible. We've all seen the VIX go crazy for whatever reasons. And, even how well studied we all are, oftentimes we're the last to know what's really going on in the market. So that's one of the reasons that, I don't watch a lot of CNBC or news and just look at, you're right, Mark, we just look at a lot of the numbers, what's coming out, what's leaking out. And when we start to see, like I said, the component ratios, when we start to see certain VIX setups, like we're seeing now, actually the slope of the VIX is the calls are going up, a fair amount. That, you start to see small signs like that. And that's when we start to get worried, Mark.
It is funny you mentioned that, because we have talked about a little bit of that anecdotally in the last few weeks of the show. We have started to notice, and we've been doing the show for quite a while, obviously, and the entirety of 2017 has pretty much been the short vol trade. And then all of a sudden, in the last few weeks, we've seen some of that old school paper from last year or so, where the short 1x2s, the straight up buying of tons of upside calls, and a lot of other. We saw that crazy risk reversal go up. I forget it was 500,000 or 1 million contracts, all bullish. So we started to see a lot of that paper all of a sudden start to pile in. So I'm with you. I don't agree with this guy's claims, but this is an environment that does seem to be poised for positioning, at least, for a little bit more high vol in the near term. I think 60 is a bit, to use a technical term, redonkulous. But hey, this guy got all the ink he wanted, so I guess he wins at the end of the day. Mr. Kevin, I'm sure people are lighting you up over there at the Institute about this question. What do you think about VIX at 60 by Halloween, sir?
As far as that number goes, who knows? I think the point you made in the beginning of this part about people making redonkulous statements and getting ink from it, it's like clickbait. So as far as 60 goes, I don't know. Do I think that the possibility that VIX moves up considerably exists? Yes. From a seasonal standpoint, we are moving into a period of the year where historically volatility has tended to ebb higher. I would not consider myself a data wonk, but if you talk about seasonality, that tends to be data-driven, and so there's a reason for that. Beyond the tendency for markets to be more volatile in September and October, I think one of the tea leaves that I'm looking at is like the relationship between the Russell 2000 and the other broad-based indices. Yesterday's move brought the RUT down to unchanged for the year versus an SPX that's still up about 8% and an NDX that's been the star up like 19%. So something's going on in the small cap universe. That's a product I traded for a handful of years. So I'm just in the habit of tracking that relationship. And I know from experience that volatility tends to move up very quickly. But again, that 60 number, it's kind of got no bearing except maybe making headlines. I go back to late August of 2015 when we saw that huge Monday open where the SPOOs were down 100 handles. And over the course of 2 days, VIX moved from, if memory serves, somewhere around 18, I want to say below 20, up to 54. Could that happen again? Sure. The last time we saw an extended stretch of meaningful volatility, I think you kind of have to go back to 2011, where you had European sovereign debt kind of come to its zenith and then U.S. debt downgraded. Then again, if the saber rattling continues, who knows? But the 60 number, I throw it out the window. Is there the possibility for potentially a meaningful stretch of higher volatility? I would say yes.
I mean, and think about this, Kevin. I mean, even going out to 2008, how many days above 60 did we actually see? In 2011, the high of the VIX was 48. In 2015, that print was hit 53. But really, the VIX, other than that kind of opening print, the VIX was really more like 30.
Yep.
And so, could we touch 60? Of course, it's theoretically possible. Are we in an environment where vol could go higher? Yeah. But, 60, in order to get 60 implied volatility, the amount of uncertainty surrounding things needs to be very high. So I think we would need to see, it feels like right now we're, Bannon is out and we actually sold off on the news. All right. So something is wrong, right? We were up 7, now we're up 3, and Bannon is out. Something is definitely uncomfortable in the markets. There's definitely a potential for VIX to go much higher, but what you need to create a real VIX of 60, not just some, opening print, everybody's bidding, like an actual 60 that means something that the futures buy into, right? You need just like banks going out of business. That is the type of environment you need. And, we did hit 53 in 2015, but it was a phony baloney. That was a phony baloney print. And the futures, the high that they got that entire cycle was maybe 26 or 27. So that just was not a real number. Even though even though you see those prints there, they don't matter unless they actually are something.
It's funny, the rationale, if you can call it that, this guy uses is that effectively, he's going to see a bunch of surprise. The Fed's going to cut more aggressively than people are anticipating. Look at the Fed Watch tool; they're pricing in pretty low probability of cuts through December. He's saying that's way out of whack. So even if that happens, I mean, look at near-term history. Look at what are some recent shocks we saw. November, that was a huge shock to the system, huge surprise. A lot of people. And how high did the futures get overnight? Nowhere near close to 60. So, Brexit. Take your pick of the recent shocks we've seen to the system that were much more surprising. They were quite literal surprises, and yet the Fed cutting a little bit more aggressively. I think it's going to take a lot more than that to get us to 60. But ballyho to this guy, he got people talking. So I guess that works. That's all he wanted to do at the end of the day. And if it gets to 60, he's a hero. If it doesn't, everyone forgets about it. And so it doesn't cost him anything to make these kinds of nonsensical claims. But hey, you guys asked us. We got to talk about it. But next time this guy chimes up, probably now. Let's move on. What else are seeing out there? Of course, excuse me, you mentioned, I think, Matt, you mentioned earlier about some of the Skew out there. Skew index getting a little bit richer than last week, about 6 points higher, 142, almost 143, hovering out there. Starting to get into that range. When it starts getting above 150, 150 level, that's when I start paying attention to that. But it's starting to get up there. It's certainly a little bit more elevated than it was this time last week. We mentioned the futures out there, also some interesting stuff that short period of inversion coming to an end now with the cash. Saner heads prevailing. Speaking of saner heads, he's not here, but we got a good stand-in for him, Mr. Rhodes, because it's time for Russell's, a.k.a. Kevin's, Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, Kevin, we're throwing you into the deep end of the pool here. Your first time on the show, and you already have a segment. I'm not sure if you're familiar with it. This is the point of the show where Russell spends about 28 minutes or so really going in depth into all the VIX options activity he saw this week. So by all means, sir, have at it.
I'm going to disappoint if you're looking for 28 minutes on this bit. But I was aware that I was going to be talking to some extent, maybe not ad nauseum, about some of the weekly trades. And looking back, there were arguably some well-timed, reasonably big weekly VIX option trades earlier this week. So just to recap, last week, Thursday, we have concerns That abates fairly quickly. By midday Monday and coming in Tuesday, we're kind of back to normal, which has been a relatively no-fear market. And so looking back to Tuesday, the August 30th, actually, let me back up just a bit. September is a long cycle, and by that I mean there's 5 weeks until the next standard expiration. So that in and of itself is interesting, and the impact that has on the related volatility products like VXX and things is worth noting. But I'm looking now at Tuesday and the August 30th, so the end of this month, 18 calls traded about 10,000 times at 35 cents. The SEP futures back then were right around 13.20, and cash was probably right around 12, maybe a little bit below. I forget how high those got yesterday, but on the other ones I have kind of a rundown. So Wednesday, you have August expiration. You saw high volume across the board in VIX options all week, well above average. On Wednesday, which was expiration, the August 30th, again, same weekly cycle, 21 calls traded 10,000 times at a plain 20 cents. VIX SEP futures were again at 13.10, so pretty much unchanged from the day before. Now I think it bears pointing out that the range on cash VIX this year is 884, which is or was an all-time low, and on the high end 23 or just above. So these 21 calls would need a very meaningful move, but those things made that move yesterday. But again, in trading, timing sometimes is everything. Again, on Thursday, so we have buyers in both these situations of some out-of-the-money end-of-month calls, with futures doing nothing early in the week. Thursday, again, before we saw the move yesterday, same expiry, August 30th. The 16 calls traded 5,000 times at 65 cents. Those closed yesterday at $1.30, so they doubled. The September 6th expiry, so the week following, 22 calls traded a couple thousand times at 18 cents yesterday and then closed at 55 cents. So this is just a whole bunch of out of the money, and sometimes standard, I'm just buying this in the event that something happens. One other one, and I couldn't tell, this is from yesterday, again, before volatility went wild. I couldn't tell if the September 13th 18, 12.5, so 18 call, 12.5 put strangle traded, or if it was a risk reversal. So again, I'm not sure. A lot of these trades that go up in size print mid-market, and I didn't go down and ask anybody about that one. But if you're looking at the strangle, that moved from what would have been 155 to 185, and we could talk in a little bit about what VVIX did this week. If you're talking about a risk reversal where somebody would have purchased the 18 calls and sold the 12.5 puts, that would have gone up as a 23-cent credit to buy call, sell put, and that went to 73 cents over yesterday. So that's like a buck move on a 10,000 lot risk reversal. So I don't know which way that went up, but either way, it's interesting to talk about. Either a very, very well-timed directional risk reversal where you can get soft deltas and sell something to finance it, or a implied volatility on VIX play, but interesting either way. And then a whole bunch of standard options that we're interested. We could talk about that in a bit, but the rest of the crowd probably wants to chime in.
Yeah, it's funny you mentioned that. We've kind of debating a few of those. It seems like those risk reversals, if it was indeed a risk reversal, and you're right, that's one of the maddening things about VIX prints is that it's an institutional product, great execution out there, so everything is pretty much split in the uprights, which makes the initial analysis a little bit more challenging. You got to dig in a little bit more, which is always fun when you're doing a large volume of it like we are. So here, but that risk reversal caught our eye as well, /strangle. Interesting print. If it was a risk reversal, it would kind of be in line with that massive size October print we saw a few weeks ago. They did about 1 million contracts. I think they were about 12, 15, so somewhere in that range. And then with I think the 20 calls blasting out to boot. But still, a lot of crazy stuff. We'll get into all that. First off, let's look at the mothership options going up for this week. The big VIX options, as you might expect, it was a pretty active week. Fire/fury/ Confederate rally/ call it what you will, driving a lot of action out there this week. In fact, today so far, 827,000 contracts on the tape. The ADV spiking up over the last week or so, up to about 751,000. Right back. That's pretty much right around the high it's been for the year, right around 750. So things are lighting it up, and it lit up this week as well. Thursday, about 1.28 million contracts going up. Wednesday, 1.12. Pretty much every day so far this week has been over 1 million. Tuesday, 1.36, and Monday, 1.32. So a lot of action out there in the big VIX mothership options. So far, if Russell was here, he'd be a little bit calmer because that call to put has come down a little bit. I know he gets nervous when it's around the 4 level, and it's about 3.6, 3.5 right now. So he's a little bit happier camper. Wherever he is, he's breathing a sigh of relief. Moving on to the hot VIX options, the hot VIX action, the big strikes for the week. Number one with the bullet. We talked about these a few weeks ago. It seemed like someone was really piling into the SEP 20s. Well, the SEP 20s have continued to be the object of fascination for this week, with a total now number one by a long shot on our list here. 705,000 contracts open on just this one strike. Put that in context, listeners. That's more than the entire OI of most of the names out there in the options industry, and that's just one strike. So that's a lot of paper. Number two, the OCT 25s with 604,000, also probably more than the OI of at least half of the options market out there on any given day. 604,000 contracts, the OCT 25s. Number three, the OCT 15. So those are both strikes that are part of that crazy, funky risk reversal. 363,000 open there. Number four, the first and only put on our list, the OCT 18 puts with 352,000 contracts. Number five, the SEP 17s getting a little bit meatier, a little bit more relevant strikes there away from the 25s and whatnot. 322,000 contracts open there. Number six, the SEP 23s, 287,000. Number seven, the SEP 21s, 281,000. Number eight, the comparatively reasonable SEP 15s with 271,000. Number nine, the SEP 30s. Got to have a 30 on the list somewhere. Here it comes in at number 9, 228,000 contracts. And rounding out the list, our number 10 spot, 226,000 of the SEP 18s with 226,000 contracts. That shows you how much is open right now. Sometimes in the quieter periods, which August is usually a quiet period, usually you'll see sometimes the number one, number two on the list could be around 250, 280. That's now number 10 or close to it. So shows how active it's been of late out there in VIX land. Total of 10.6 million contracts open, about 8.3 on the calls and about 2.3 on the put. So a lot lighting it up this week. That's just in the overall week. Matt or Mark or even Kevin, I know you're looking at these as well. Any activity in the big VIX options, the mothership options catching your eye this week outside of the weeklies?
Yeah, the big trade that went up in two ways. We customer did the 1721 in September, those two strikes that you happened to mention. They did a 2x3, 20,000 by 30,000, paying even. We also saw that go up as a 1x2, where they collected, I think, 15 cents. And that went up for size as well. So there's been a couple of big trades around the 1721 call 1x2 that caught my attention. We've also seen a ton of the call spread versus put trade. Now that trade is back on, people are all about selling puts to buy call spreads, and it's fun and hip again to have a long vol hedge, and that seems to be paying off so far.
Oh yeah, those things were printing across months and like crazy for the past week and a half.
Yeah, it is funny how everything old is new again, and we were waiting for the ratios to start coming back in pretty aggressively, and it started with a trickle a few weeks ago, and now it seems to be doing pretty well. Matt, that might be a good subject for a little bit of a back test for yours. This strategy has been popular for a while out here in VIX land. The selling one, maybe slightly out of the money call in VIX, and then buying two, a little bit more out of the money calls. Let's say 1% and then like 5%, something like that. Sounds like it might be an interesting back test over there at ORATS. What do you think?
We'll do it. We have a new web-based version that we could do pretty quickly. So that sounds interesting. It's good to hear about these trades going up because we could put it into our tester and see how it would have or how it worked historically. Thanks, Mark.
I think people would respond to that. You do the VIX back test of the week, the VIX trade of the week. People would be lining up at your door. I think that's my free tip for the week. Take it and run with it. Some other products, obviously, you guys like to trade. You guys love yourselves some VXX. Us here on the program, not so much. Even though we're not going to debate the cause of the erosion today, we've done that too many times in the past, quite frankly. VXX hovering exactly around the 13 level. Mark, I'll toss it to you because I know you don't read the notes, so you won't have cheated. What would you guess right now? Number one hot option out there in VXX these days.
What do you mean I don't read the notes? How dare you?
So I can rely on you. Your laziness will not allow you to cheat. It's perfect. It's a good mix.
How dare you call me out for exactly what I do? I'm going to go. So VXX is what, around like 12, right?
13.
It's right around 13. So I'm going to say that the 15 calls in September are the really active strike.
So you have been listening to previous shows where we've surprised you with, it has been front month calls that have been doing pretty well. This week, I should say, it's the puts lighting it up finally. We've been waiting for puts to light it up. It's the Sep 10 puts, 148,000 of those bad boys. We've been saying for so long, the puts, maybe not that near term, a little bit longer term, are kind of one of the better set it and forget it trades in a while out there. And yet we haven't seen those reflected in the options paper. Finally getting some puts at the number one spot there, even though maybe Sep 10, a little bit interesting, a little bit aggressive, but we shall see how those pay off. XIV, others move in commensurately. We'll touch really quickly OIV and OVX out there in crude oil land, hovering right around the 28 level. So vol off its recent highs out there in crude, but still mildly elevated compared to other levels recently. We'll talk more about that if you like all things commodity vol in a little bit, in about 45 minutes over there on TWIFO. But now it's time. We've been talking for a while. It's time for you guys to jump on in with us and check in on our volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the voicemail, the portion of the show where you guys take the reins. You ask us questions. Once in a while, we flip the script to ask you guys some questions, too. Last week, we asked you guys, hey, things were going pretty crazy last week. At the time we posted it, VIX was about 16.17, got up to over 17. And we asked you guys, hey, is this a temporary blip, or are you buying what this is selling? Which level do you think we'll hit first? Think we'll hit 20 first, or will we get back down to the single digits, or are you guys just done with it? You're in cash. 51% of you saying that you expect to see a print of 20 first before you see single digits. 28% saying the other way, saying less than 10, and about 21% saying the heck with it, I'm out. This is too much for me. It's funny how this has been playing out now that we're coming off a little bit. I was initially leaning to probably single digits again, but I wouldn't be surprised to see some crazy intraday aberrant print get up around that 20 level before we settle right back down into the mid to low teens where we are again. Certainly not a 60, but I could see why some of you guys are feeling the higher new regime of vol, if it is indeed perhaps short-lived. This week we asked you guys a little bit of a question, a trick question here, not trick question, but a puzzle for you. We asked you which major index has experienced the largest percent change in essentially front month, so 30-day at the money vol year to date. So far throughout all of 2017. So think of all the ups and downs, the turmoil and things we've seen so far in 2017, a new administration, all these other crazy stuff, shock and awe, fire and fury, all this stuff. So we gave you 4 choices, the big 4, Nasdaq, S&P, Dow, or Russell. Let's go with Matt. You're our guest. You get pride of place. No cheating with any back testing. Which of these 4 gets your vote, and also what do you think our audience is voting for?
Oh, I'm going to say the Russell, and I'm going to say the audience says the Russell. Interesting. Kevin,
same question for you, sir. What is your vote, and then what do you think our audience is voting for?
I'm going to echo the Russell for a couple of reasons. It outperformed dramatically just post-election, and it's underperformed fairly markedly for the past handful of months. As I mentioned earlier, it's essentially unchanged on the year. And I think you have, Mark, I think you've cultivated a very savvy audience that's going to get this right and agree with us. I don't know if I'm right, but I feel confident.
Well, you said you're an old school Russell guy, so you're used to watching Russell. So maybe you have some skin in that game. Last but not least, Mr. Meatball, you jumping on the Russell train, or are you maybe taking a departure? Maybe throw a flyer at Dow. What are you feeling?
I mean, the Dow. Nobody trades the Dow.
That's why I tossed you the Dow, because I know you love it so much.
Yeah, nobody. No, Russell.
All right, 3 votes for Russell. So far, you guys are right, at least for what our audience is picking, 41%. I do have the answers in front of me, so I can't weigh in myself. I don't want to color the voting. We still have about 8 or 9 hours left or so of this poll, and we want to talk about it on TWIFO a little bit later. So we will reveal the actual answer probably on Monday's option block or something like that. But if you haven't voted yet, listeners, you got a few hours left at options to cast your vote. So far, Russell, 41%, NASDAQ, 36%, and then 14%, only 14% of the S&P, and I thought to get a little bit more love than that, and 9% for Mark's favorite, the Dow. All right, moving on, what you guys are on about. Steve Pace, I guess, was listening. It must be coming in. This comes in from Twitter, I think. He's saying when we said it probably won't hit 60 in the VIX, he says, you guys dare tempt the market gods. We dare here on the Volatility Views show to tempt the market gods. And we said it might get up there. I think it was Kevin or Mark said it might print in the 50s, but 60 is perhaps a bridge too far. And I'm sticking by it, darn it. We dare tempt the volatility. We know the vol gods are fickle. Hey, we wrestle with them every week on the crystal ball, but I don't know if they're quite that fickle. Let's see. Here's what do we got here? We got a bunch of longer ones. Here's one for. Actually, this one is for. Well, I should go to this one. This one's a little bit longer. This actually comes from Tosaw. Actually, one of Tosaw's clients, Uncle Mike Tosaw, over there on Option Block, and he forwarded it to us to talk about here on the show. This says this client wrote in saying, I have an options question regarding VIX, and I cannot seem to find the answer. Is there a way to determine the incremental change in a SPY option price as the VIX moves? For example, if VIX moves 10%, does that mean the extrinsic value, so obviously that would be the portion that is the vol component and everything, all the fluff, not the meat, not the intrinsic value. He writes, the extrinsic value of the SPY option should be 10% more expensive. I checked the 30-day SPY option thinking that the IV of the option would map to VIX in some way. Clearly that is not the case. He puts in parentheses here, I could be looking at the wrong spot. I have seen qualitative examples of this, but not quantitative. Is there a formula? And he puts in parentheses, modified Black-Scholes, etc. Not sure if you're okay with me sending you these questions. I can also send it to Vol Views, which Mike ended up forwarding it to us, so he did. That is more appropriate, etc. Now, this is an interesting thing. Kevin, this probably reflects a question you guys probably get a lot in some shape or fashion over there at the Options Institute quite a bit. A lot of people maybe conflate VIX and S&P vol a little bit more. Like this guy obviously thinking that VIX equates to all of SPY vol, regardless of where you are, on the option chain. Where in reality, the VIX formula obviously is primarily front month at the money with some extra juice, shall we say, added in now. It takes the wings in. They start playing with some of the weeklies in there as well. So that the exact conversion gets a little bit muddled, but there is the VIX formula. That's probably a good starting point for him. But I'm sure you get this question a lot over there, Mr. VIX. That's Russell's name, Mr. Kevin. What do you have to say for our friend here, who I don't have the name. Let's just call him Uncle Mike's client.
Uncle Mike's client asks an interesting question that the short answer to is no, you can't just figure that out. And the longer answer is it depends on a whole lot of other things. You alluded to it just a second ago when you're saying, all right, are we looking at a 30-day at-the-money SPX or SPY option? Bigger picture, the Greeks are theoretical, like it or not, right? They're giving us what if then this should happen. But the bigger picture is, okay, if you are trading further out the curve, the tenor of your options is greater, you're trading 90-day options, they are more sensitive to changes in volatility. If you are trading down that skew, like we mentioned the skew index earlier, that could be more sensitive as well. I mean, if you run like when I was on the floor, sometimes we would run flat volatilities just to see what things look like, but the world doesn't work in a flat vol, right? So you can get some sense, but there's no way that you're going to get a very clear-cut answer.
Yeah.
But understanding whether you're trading at the money, out of the money, calls or puts, and how far out the curve is important.
Yeah, and let's not forget this is an index. So looking at VIX and then trying to equate that directly to an option, a specific option, is kind of like looking at the S&P 500 and trying to relate that to a specific stock. Maybe it's not that, maybe that's not exactly apt, but it kind of is. I mean, the VIX is an index of kind of everything that's trading with about a duration of 30 days. It's not. So it's out of the money, at the money, in the money. And another important feature is that, there are pieces of the VIX because of how it weights itself that as it drops, it naturally goes up, whether vol actually goes up or not.
Yep.
And so really, if you want to look at your, how much your option is up, there's this Greek called Vega, and there's this output called change in implied volatility. And if you multiply that change in implied volatility times the Vega, that is how much your option will gain on that particular day and at that particular time. That's really what it comes down to. There's no, you can look at the VIX and get kind of a rough idea of what kind of everything is up to, but that's really all you're going to get out of it.
Yeah, people, I think, conflate VIX with a lot of other things. It's at the end of the day, it's a somewhat useful ballpark approximation for effectively front month at the money vol. And it's not even exactly that because there's other stuff in there, but it's a ballpark for that. But once you get away from front month at the money in either direction or farther out in time, the less effective or accurate really a VIX is going to be. Good question though. That's an interesting one. Maybe that could be a talking point at one of your future seminars over there at the Options Institute, Kevin. We got another one here. This comes from Richard D. He sent in a bunch over the last few weeks. We had to kind of break them up. Here's another parts of one of his questions. He is asking us, I was wondering if Mark S. or Andrew ever tried VXX, UVXY peer type trades, either intraday or longer, meaning capturing the fluctuations in the prices of VXX and UVXY via options by taking some put type spread in one and a call spread in the other when the ratio of the prices look out of whack, or is this a trade the big financial firms already do? Thus, there is no edge there. Well, Mark, he's looking for Andrew. He's not here. He's looking for you, too. So we'll start with you. Have you ever done this specific peer trade he's talking about? And what do you have to say for our friend Richard D?
I mean, so within the ETFs, there are all kinds of interesting pair trades. A famous one is that if you short XIV and VXX at the same time, equal dollar amounts, you make money. If you go long 2 VXX and short 1 UVXY on a dollar neutral basis, you make money. There's a lot of weird idiosyncrasies with how the ETFs handle themselves. that can cause these type of pair trades to exist. So specifically this pair trade, I need a lot more information as to whether it's something I've looked at. But, do I look at UVXY versus VXX as a pair trade? Absolutely. It is unequivocally a pair trade that can be executed.
This is why it's cool to have a backtester guy on the show with us today, because he could type a few numbers into his platform and do exactly that. So Richard D., this is your lucky day. We got Matt on from ORATS as well, and he was doing just that. He was punching some numbers in while we were talking. Matt, what do you have to say here for our friend Mr. Richard D., who wants to trade some peers trades here?
Yeah, I'm getting a lot of work out of this. I have some more homework, but I just did a quick one on the VXX, UVXY, and it does look like there's some divergence in important times. So, the fluctuations of price would be interesting to check, because another thing that we could do in our system is plug in an entry date and an exit date. So we could identify a fluctuation that might be, I don't know, more bullish in the VXX than the UVXY, put on some type of, short, long, option trade and trade it. Just going right off, it does look like the VXX slightly outperforms the UVXY over time, but there's probably some times that you can identify and then back test, and then this is the way that we love to do it here, is to find some type of a signal, like when it gets out of whack, and then try to find the best type of option strategy by just brutally going in and testing all the potential strategies that a person can implement, and see how it works. So I appreciate the question, Mark.
There you go, Richard. You get a free back test courtesy of us here on Vol Views. Meanwhile, we got to keep rolling. It's time for our final segment. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. Welcome to Crystal Ball. It's where we attempt to wrestle those fickle volatility gods. And we all know how fickle they could be, because even at the beginning of the show, we weren't looking too bad. Actually, it was right around 1340. So Russell, who was ever the buyer of VIX out there, always well on the upside, was about 1350. So he was actually looking pretty good. I was right around 12 double, so I was about 3/4 or so of a point, a little bit more off. Andrew cut me to the downside. He was at 12.01. He cost himself. He was way out of the ball game. And I think our guest Bill Valentine was at a 10.5. So he was really selling vol. But looks like as the show has gone on, we've rallied almost 3/4 of a handle out there in the old VIX Cash. So none of us really that close. But that said, we'll say Russell was the de facto closest out there. So that means, Kevin, you get pride of place in Russell's place. What are you feeling for this time next week? So exactly this time next week at showtime next week, what do you think VIX Cash is going to be?
My gut sense, and that's all this is that the calm, the super calm, and we've seen historic lows in realized volatility about a month ago in the S&P 500 is behind us, and volatility will continue to ebb higher. I'm going to call it, I think we're going to go through last week's highs, which were like 1666 or 7. I'm going to say 18.25.
Wow, doing your best Russell impersonation, buying yourself some vol. Wow, he'll be pleased with that. He'll be pleased. If you came out and said like 11, I think he would be very upset. So well done there. 18.25. Wow, that's might be one of the higher predictions we've had on Vol Views in quite some time. Next up, Matt, you're our guest. So you get pride of place there, a dubious honor because it's a challenge. But what are you feeling? What are your back testing systems telling you for VIX Cash next week, sir?
Yeah, just on an overall basis, I think that we're entering a higher volatility regime. It's not going to go straight there and sit there. It's going to ebb and flow. I thought we saw a little bit of a shock and a recovery now. So I think we're in kind of a basing out period. So I actually think it's going to be a little bit lower. Next week, but then, in the coming weeks, I think we're going to hit, the 16, 18, 20 type numbers. That's what we're looking for.
So next week, what is your number for next week?
I think more like, more about where it is right now.
So about 14.30 is what I'm going to put you down for?
Yeah.
Okay.
I'm going to go unched next week.
I could see that. Unched. I could feel that, sir. In fact, that's what I was feeling. That's the danger of going third. Someone always going to stomp on your space. Because I'm kind of on the same boat. I could see arguments for slightly up. I don't know about 18, but maybe we hit about close to 17 back there in the craziness of last week. And then of course we have I could see arguments for slightly lower too. Since we have Kevin going crazy upside, we have Matt going right here. I don't know if I'm buying too much higher. So I'm going to go the other way. I'm going to say 13.55 for this time next week. And I probably should put that down under my name. That would be easier. There we go. And last but not least, the greasiest meatballs. Mr. Sebastian, what are you feeling? Crazy high? You feeling crazy low? You feeling unched? What do you feel?
I feel both. There's something.
Welcome to the club.
There's something really off about today's market. The conventional wisdom was with Bannon out, we rally hard, because that means that the kind of the other crazy person besides our president is out of the administration. The guy that was encouraging him to tweet about Confederate statues is out, but we're not rallying on that. That tells me something is off. So I think we have the potential for a much higher high next week, while also settling lower than we currently are. So I think we could end up at, I think we could see a prints below 2400, well below 2400, and prints above 2450 by next week. I think we've got some realized volatility coming, and I'm going to say 12 on Friday.
Wow. Excellent buying your some time for yourself, sir. Well done there. You've done this show once or twice. Speaking of this show, though, that music means we're done. Unfortunately, it was a fun run. We could probably go another hour talking about all this fun stuff. But we have other shows to do coming up a little bit. Twifo, stay tuned for that in about 27 minutes or so. But before we go, let's go back around the horn, see what's cooking with everybody. Let's go in order. Let's start with you, Matt. We just saw some of your back testing in action. What else you guys cooking up over there in the land of ORATS? And if people are interested, maybe kicking the tires for themselves, where should they go? What should they do?
Yeah, I'm beating the drum for more tail hedging protection, and we're doing a lot of testing on how to do that as cheaply as possible, but still effectively. And I at some point, I'd like to talk about Sharpe ratios and about what you should be looking at as far as debacle risk and returns and such. But that's a lot of the testing for some big pensions that we're doing over here. We're very excited to release our web-based version of our institutional backtesting products. So that's coming out. ORATS.com, ORATS.com. You could email me at matt@ORATS, and those are the best places.
There you go. Hit the man up, matt@ORATS.com. Let's go to ORATS.com to learn more. And Kevin, same question for you, sir. What are you guys cooking up over there at the CBOE Options Institute?
Well, we are boning up on Bitcoin knowledge because CBOE Bats made an announcement about hopefully fourth quarter or sometime before too long, the listing of futures and perhaps options around Bitcoin. So excited about that. And as far as Chicago goes, I would do the Aaron Waters Show buyer seller of this eclipse thing.
Oh, Aaron Waters Show, yes. It is that time of year here in Chicago. Aaron Waters Show, eclipse, all sorts of crazy stuff popping off here. So if you're in the Chi-Town area, a lot to look forward to, or perhaps flee from, depending on your point of view. And last but not least, Mr. Meatball, what is cooking in the land of Option Pit and Carmen Line?
Things are good. Go check out the Option Pit blog, optionpit.com/blog. And, if you want some volatility exposure in your portfolio and you're rich, give me a call. I'll trade your money.
There you go. If you want vol exposure and you're rich, hit them up, Carmen Line, to learn more. And on behalf of the Meatball and Kevin over there at the CBOE Options Institute and Matt over there at ORATS and indeed myself, I I thank all of you out there in the listening audience for downloading, streaming, subscribing to the show. Of course, sending in such great questions. Keep them coming. Didn't get to even half of the ones we have on there, but we love hearing from you guys. We read them all, even if you don't get a chance to answer them all on the show. If you like vol talk, stay tuned. We'll probably be talking more of it in the indices and some other products as well on TWIFO in about 25 minutes if you're listening live. If not, enjoy it after the fact on your podcast provider of choice. And we'll see you next week for more Volatility Views.
Volatility Views is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's blog gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/blogs today to sign up for regular updates via email.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.